Hi guys, this is CA into Financial Management, newly added series, and this is Financial Analysis and Planning Ratio Analysis chapter. In this two newly added question number 10 and 11, let's get started with the 10th question. From the following information and ratios, prepare the balance sheet as of 31st March 2023 and income statement for the year ended on the date for Mrs. Guruguls and Co. Average stock is 10 lakh. Current ratio is 3 is to 1. Asset test ratio is 1 is to 1. PBIT to PBT, which is 2.1 is to 1. And average collection period, assume 360 days in a year, 30 days. Stock turnover ratio, use sales as turnover 5 times. Fixed asset turnover ratio 0.8 times. Working capital 10 lakhs. Net profit ratio 10%. Gross profit ratio 40%. Operating expense 9 lakh, which is excluding interest, and long term loan interest, which is 12%. Taxes nil. Let's first write down the given data. I wrote down the given data of the questions and let's get started. In this average stock they have given, and let's get started with working capital and current ratio, which is current ratio is current asset by current liability. Working capital is current asset minus current liability. So we find with the help of the balancing figure. So first we take the current ratio, which is current asset by current liability, 3 by 1. When we solve this, we get current asset is equal to, we have to cross multiply this, 3 current liabilities. Substitute the current asset value in this formula. Current asset is equal to 3 current liability minus current liability. Working capital, which is 10 lakhs. So 2 current liability is equal to 10 lakh. When we divide this, we get current liability, which is 5 lakh, and we can find the current asset, which is 3 into 5 lakh, which is 15 lakh. We just found out the current asset and current liabilities. Current assets, current liabilities and current assets, and with the help of this we find any data here. With the help of asset test ratio, we can find the value of stock. Asset test ratio formula is current asset minus stock by current liability is equal to 1 is to 1. We already know current asset and current liability, we just found out. Current asset is 15 lakh minus stock by current liability is 5 lakh is equal to 1 by 1. When we cross multiply this, we get 15 lakh minus stock is equal to 5 lakh. When we take stock here and 5 lakh here, we will get stock is equal to 10 lakh. We found out that stock is equal to 10 lakh. With the help of stock turnover ratio, we able to find out the sales. So let's do this. Stock turnover is equal to, which is 5 times stock of sales by stock is equal to 5. Sales we have to find out. Stock is 10 lakh. Sales right asset is stock is 10 lakh is equal to 5. When we multiply this, sales comes to 50 lakhs, and then with the help of sales we can find out the gross profit and net profit, which comes to gross profit is 40% of sales, net profit is 10% of sales, which is 50% of 10, which is 5 lakhs, and 40% of 50 lakhs, which comes to 20 lakhs. And next we pass on. Here we found out net profit, which is nothing but profit before tax. Here they have given profit before interest and tax to profit before tax, which is 2.2 is to 1. we can find out the profit before interest and tax, PBIT by PBT, which is 2.2 by 1. PBIT we don't know. PBT was 5 lakh is equal to 2.2. When we multiply 5 lakh into 2.2, we get 11 lakh, which is PBIT 11 lakhs. We just found PBIT. And here they have given the collection period as 30 days. So we have sales actually. So we can find out the debtors. Collection period is 30 days. Debtors is 30 by 360 into sales, which is 50 lakh. When we multiply and divide this, we will get 4 lakh 16,667, which is debtors or receivable, whatever we can call it. And after that, we have operating expense and interest, which is 12%. With the help of this profit before interest tax, profit before tax, we can find out the interest, PBIT, which is 11 lakh, PBT, which is 5 lakh. Difference would be interest, which is 11 minus 5, 6 lakh. Interest amount is 6 lakh is 12%. Then total amount of loan would be 6 lakh divided by 12, which comes to 50 lakh. The loan amount is 50 lakh. And what else we can find out? That's all. Let's prepare our rough income statement. Income statement, which is sales 50 lakh minus cost of goods sold, which comes to where we found out cost would be 30 lakhs. Gross profit is 20 lakh. This is actually the balancing figure. And after that, less expenses, less interest, which we found out is 6 lakh. And net profit would be, we just found out, right, 5 lakh. And the balancing figure would be operating expenses. We have to minus these 20 minus 5 plus 6. We will get 9 lakh. And after that, we have to prepare the balance sheet. Sorry, actually we have to minus these two. In 20 lakh, we have to minus 6 lakh and 5 lakh. Then we will get balancing figure of 9 lakhs. This is what the income statement. With the help of the workings, now we have to prepare the balance sheet. Balance sheet. Your liabilities, assets. In liability, we have found out the long-term loan amount. Here just we found out, right, 50 lakhs. We have to write it. And we have found out current asset and current liability. Current liability is 5 lakh. Current asset is 15 lakh. Here we will write current liabilities 5 lakhs. Current asset. Current asset would be combination of stocks, debtors, and balance would be cash or some other things. Total of current asset is 15 lakhs. And we found stock separately, debtor separately. So we write what we found out. Where is stock? Stock we found out is 10 lakh. And debtors we found out it was actually 4 lakh 16,667, and the balance would be the cash and others. So 15 lakh minus 10 lakh minus 4 lakh 16,667, which comes to 83,337. And we also found out of fixed asset. We just forgot to find out the fixed asset with the help of the fixed asset turnover ratio. So sales by fixed asset is equal to turnover is 0.8 times. Sales, which is 50 lakhs, by fixed asset is equal to 0.8. When we divide 50 lakh by 0.8, we will get value of fixed asset, which is 62.5 lakh fixed asset value. We have to write it here. Fixed asset, we just found out 62 lakh 50,000. Fixed asset and current asset we just wrote. So total side would come to 62 lakh 50,000 plus 15 comes to 77 lakh 50,000, and here also same 7 lakh 50,000. Your balancing figure would be owner's equity, equity share capital, anything. So we have to minus this 77 lakh 50,000 minus 50 lakh minus 5 lakh, which comes to 22 lakh 50,000. That's it, guys. We just completed. See you in the next video. Bye, guys.